Click here to go live.
Okay, live sync streaming starting soon.
Excellent connection.
It's 6:01. We'll see you over there. I'll say hi as soon as I see you.
Okay. Welcome, welcome. Glad to see you're here. Taking a deep breath because we had a little bit of technical difficulties 5 minutes before the stream was starting, so we struggled a little bit to make sure that everything was online here. So I'm seeing Nick at this point, and I'm seeing Chelsea and Axel and Lance all online at the moment. So we'll be getting started fairly quick here. So today, we're going to go over 3 more case studies today, in addition to the questions that everybody, I'm sure, wants to ask if you are there. And so, okay, I see my assistant, and I see Jacob has joined us, and Dustin. Good. We're getting keep people online. So what we want to do today, of course, is go over some more case studies, and especially answer the questions that everybody may or may not have, so that we can be able to keep the class moving forward, because this is also supposed to be a chance for you to get your questions answered, especially possibly about the grading or about assignments or clarifications on the things that you need to get done in the class. So any of you have questions on that, that's good. I see Joshua joined, so that's good. Thank you, Josh. So if you have any questions, please post them into the chat window, and I'll answer those. Okay. Well, what I'm going to go ahead and do then is I'm going to start discussing our first blockchain case study. Now, what I'm doing is I'm going through a single article that has 3 different sections. And so what we're going to do is change my window here so that you can see what I'm looking at here. And with the exception of the fact that we've got a second line here, the VAT and sales tax settlement, these 2 lines are the same, just had a little error in getting those typed out. So what we'll do is we'll be talking about 4 different subjects today. And so in doing that, hopefully you'll better understand the blockchain and what it's trying to deliver. So today we're going to delve mostly into how finance is benefited by using blockchain. Now, it would seem by looking at all the cryptocurrencies that blockchain is just a finance thing anyway, but really it's not. Finance can be benefited in a lot of different ways by the use of a blockchain that's meant for the business rather than just for the cryptocurrencies that are outside of the business. So what we have is we have a wheel here that Deloitte and Touche put together. Now, Deloitte is a company out of Great Britain, out of the UK. So you're going to see some odd spelling of words as we go through this, just because it's going to be the Great Britain spelling of the English language, which oddly enough, Benjamin Franklin, when he created the first dictionary in the United States, when the colonies were established, he decided to change the spellings. So you'll see some different spellings than what we're used to here in the U.S. That's all due to Benjamin Franklin and the way he wanted to simplify the spelling of the language in a lot of ways. Hi, Sandra. Good to see you. Okay, so blockchain helps business in an operational sense. We're going to discuss specifically today the procure to pay section of operational finance. And what that means is it helps to streamline that particular area of finance. Other areas, such as taxes and treasury, are two areas that we're going to also talk about. So they refer to these areas up here as the operating functions of a business. And every business, when it starts getting of any size, has a finance function that has to perform all of these different operations that are in blue. Okay, and so these are kind of the international norms, so to speak. Various companies may have specific functions that are not listed here, but these are generally the ones that are most often dealt with in a finance department. Okay, so I'm going to put this one away. And so what happens to procure to pay finance? Now, procure to pay is a description of when a company goes out to purchase a product, it then has to be invoiced and then pay the invoice. Now, so what you've got here is procurement, buying the product, and then the business paying for the product. Now, part of the challenge is that businesses that do business with each other sometimes will have a difference of opinion as to how much the bill is. And so what procure to pay finance does, and let me pop up a larger version of this here, is one company will have its software and its financial data, and then if you have a blockchain that's managing the data between the two companies, whenever the company does an invoice that's needed to be paid by the other company, it goes through the blockchain and immediately appears in the other company's blockchain software. So each company has, through the distributed ledger, exact copies of the data on both sides. So whether it's an invoice or whether it's a purchase requisition, depending on which side of the business you're on, whether you're company A or company B, whether you're buying or selling, if you have a blockchain working between you, have one version of the truth. Well, that simplifies a lot of information. In fact, ERP systems have been in existence since about the 90s, but now it's becoming kind of old technology in a way, because now that technology, while they tried to keep linking these ERP systems so that the ERP system would talk from company to company, now blockchain, just in its native version, by two companies joining the same blockchain and purchasing and requisitioning each other from that same blockchain, instantly have the same information without having to have this ERP coordination and sending files over to the other ERP system and linking things that way. So let's put this down here. And so what happens is you have, as it is highlighted here, a single source of the truth between the buyer and the seller, enabled by a shared and distributed platform. So we're going to talk, of course, a lot about this shared platform, or the distributed nature of a blockchain platform, when two companies get together to use it. Now, later on, we'll talk about, well, wait a minute, Boeing and Lockheed Martin are competitors, but they buy and sell to each other. How are they going to use the same blockchain as competitors? Well, they can use the same blockchain because permissions are given within a private blockchain to see only the data that pertains to Lockheed Martin or that pertains to Boeing. And so with those private keys that we've talked about, you can only see your data given the permissions that you have within each of your systems. Okay, so the corporate world where information is decentralized across companies, it's unavoidable that the information is not aligned. And that's the challenge that you have when you have an ERP system, is one system may be misaligned from the other. Then you've got to have people as intermediaries in between to figure out where the difference lies and who needs, which side of the ledger needs to be corrected. And then you have extra expense. But if you have a distributed database or distributed ledger, in the case of a blockchain, you end up with a single source of the truth, and a purchase is done, delivery happens on the other side, an invoice is generated. The company receiving the product then quickly can pay according to whatever terms are agreed to between the companies, whether it's net 30 or net 10 or pay on delivery, whatever the terms are in the contract. The contract is held within the blockchain so that the blockchain then manages both the receipt and the payment. Similar to what an ERP system would do if you were familiar with ERP systems, but it just does it quicker and a bit easier because of the distributed nature of the database. Okay. So the next piece of that is that we talked a little bit about a contract between the two companies. Well, a supplier and a vendor, a purchaser, will have a contract between them. And what happens in a blockchain system is that can become very much like a smart contract. In fact, that information would be embedded in a smart contract that says vendor company such and such has these terms with the receiving company such and such. So if we were dealing with Lockheed Martin and we bought a product from them to go in one of any number of our vehicles, whether it be a satellite or a spacecraft or a plane or a jet, military versus commercial, whatever the product is, if we bought it from them, they would then ship it to us. They would have the contract that says how much we're supposed to be paying for it. It would be shipped. We'd receive it. We'd tell the blockchain that we've received it. And once we tell the blockchain that we've received it, the invoice is immediately created from that receipt and immediately then paid to Lockheed according to the contractual arrangement that would be embedded in the smart contract. So it's very quickly and easily taken care of. And it makes it a lot simpler for each of the two companies to continue doing business with each other. All right. So any questions on procurement to payment part and how blockchain can help that? Okay. All righty. Okay, so because we're here in the United States, sometimes you might not have heard of a term called VAT, or value added tax. Here we pay a value added tax every time we go to the store. It's called a sales tax. And so a value added tax is akin to our sales taxes. And so when you buy from a vendor in the European Union, for example, you have what they call a value added tax to pay to the taxing authority in that local area. So what happens then, let me call up this next one here. What happens then is you have a business, and a business is doing multiple transactions, and each of these transactions labeled as 1, 2, 3, 4, 5 through 8. If both the taxing authority and the business are member of the same blockchain, the taxing authority can very quickly tell the business what their particular tax rate is for the particular jurisdiction that is you're purchasing the part or the product in. And very quickly the blockchain can then do the calculations in a smart contract to calculate the taxes, and then send the taxes near real time. So I make a purchase from a place there, and my business is going to consume that product and not sell it or resell it to somebody. If my business is going to consume the product, then I owe a value added tax to the taxing authority. So through the blockchain, I'll know exactly what the rate is. Once I purchase it and get the product, I can pay the vendor their portion. I can pay the value added tax straight to the taxing authority, and away I go. The other end of that is that if I sell a product and I'm in a certain taxing authority, when I'm creating my invoice, I can make sure that my invoice is accurate and tell the taxing authority and tell from the taxing authority exactly what to put on the invoice. It is the amount of the value added tax that needs to be paid by the particular business. Sorry, I had to check what I don't get text messages very often. So okay, so that's how the blockchain can help the taxing authority. So what happens is, here I've highlighted this section here. It says, when settling VAT taxes, invoices play a significant role and won't change in a blockchain-based solution. However, blockchain allows the stored digital invoices on a shared ledger that both seller and buyer can verify between them. Because the data is immutable, smart contracts execute the programmable processes, in other words, smart contracts, with the possibility that you can automate the settlement and route it to the correct taxing authority almost real time. So Deloitte & Touche then identifies three big benefits. It says, VAT reporting relies on individual businesses to correctly settle VAT amounts. A lot of times that's done in an Excel spreadsheet, and it's done through the math on an Excel spreadsheet. And businesses, of course, run the risk when they do that. Hi, Chris. I noticed that you joined. What generally can happen is, if you're a little bit off, you can incur penalties. And a lot of times that penalty can eventually add up. So the more accurate the information is, of course, the better it's going to be for the business. They'll save that little bit of money. Now, it adds up after a while when you've got thousands of transactions. So the good part about having a blockchain with all that information agreed to on a distributed ledger is that it can be paid real time. Now, generally what happens then is you end up with a situation where a lot of times a business will pay at the end of the month or the end of a quarter or the end of a week, depending on their volume. And when you're adding all that stuff up, a lot of times you can make mistakes. And then if the taxing authority decides to audit your business and finds those mistakes, it can lead to more fines and other problems, other legal problems. So VAT statements are submitted in discrete time, monthly or quarterly. The risk of wrong or fraudulent submissions will be highly reduced. So let me show you another graphic that helps in this situation. Here you have generally the green here is how it happens in a business real time. Generally, a VAT invoice is issued by the company. In other words, you'll attach the VAT, the value added tax, to a product you've sold, and then the client pays the bill, so you collect the tax. Okay, then the next thing here is the information about that payment is recorded into a system. In other words, you'll record it into your ERP system or your accounting system, and then the company pays their suppliers with an X bank transfer. Okay, so the supplier gets paid through a transfer from the bank. We work generally, large companies work with several major international banks to pay each vendor. And then the company calculates and submits the VAT tax to the taxing authority. Okay, that's the way it happens generally in a company that's doing it all manually or with internal systems. So let's say that the buyer and seller agree to invoice each other on a blockchain. The smart contract calculates the VAT and submits the VAT amount directly to the taxing authority. And then instantly updates the VAT balance between the company and the taxing authority, taking care of it in a very seamless and quick way. So the buyer and seller exchange their money. The VAT tax is paid directly to the taxing authority, and everybody is happy. And then at the end of the quarter, or the end of the week, or the month, or the quarter, the company would then compile and submit a report to the taxing authority that says, here's how much we owed, here's how much we've paid. If there's a little bit of a difference, that you settle that difference. But generally, in this kind of a system where it's done one at a time and it's done very quickly, the difference would be very negligible, if at all. Okay. All right. So at this point, are there any questions that have arisen while I've talked about this? Because we're going to get into something really, really spectacular next. So don't anybody fall asleep just because I'm talking about finance, okay? Because finance can be dull and boring. But here's the situation. I'm going to tell a story, because right now I'm dealing with an ERP implementation of SAP, a big ERP system that is going to be enterprise-wide at Boeing. Now, if you can comprehend at all the size of a Boeing, it's just hard to comprehend. We have a site in 48 of the 50 states in the United States, as well as multiple countries, where we both do commercial and military, distribution of products. So, knowing that, you know that we would then deal with a lot of different currencies. So if we're dealing with a European vendor or a supplier, we're going to be dealing with the euro. If we're dealing with the UK, we'd be dealing with the pound sterling. If we're dealing with Japan, which we do a lot, we're dealing with the yen. If you're dealing with China, and we do sell a lot of planes to China, especially in the commercial space. We don't do any military with China, of course. So in the commercial space, we deal with China. So we're dealing with their currency, and I don't happen to have that on the top of my head. So you can see that there's a challenge with selling and buying products all over the world in various different currencies. Well, how do you keep all that straight? Well, current ERP systems, the SAP system, for example, does deal with a lot of different currencies. And the way that you deal with not losing money when you're selling in other currencies is to do a thing called hedging. Okay? So let's look at our first issue. Okay? Problems with finance exchange. FX is finance exchange. So here we've got an exchange problem. Let's say I'm selling or buying a product to Japan. I've got an exchange issue between the dollar and the yen. So with an exchange of the dollar and the yen, I then need to make sure that when I sell the product over there, I know how much it's worth in dollars and translate that then to yen in order to pay the bill out accurately. Now, if there's a difference, let's say I'm on net 30 terms and with our supplier in Japan, okay? So I sell them a product and in 30 days they pay the bill. How do I make sure that I'm still getting, let's say, $100 worth of yen 30 days after I've sold it to them and priced it? Well, there's no guarantees that the yen is going to be worth the same today as it is 30 days from now. And the difference in the value of the yen versus the dollar with that 30-day spread of time is a problem of risk. Now, let me pull this example open here. Here we have an example, and here's one of those odd spellings. Credit is spelled with a K, okay, in the UK. So here we've got an example between Singapore, Germany, and Denmark. So the Denmark is on the euro, and Germany is on the euro, and Singapore is on whatever SGD is, and I'm not sure. Singapore is something dollar probably. So here we've got a product moving across these companies, these sections of the company, and the example basically is that Singapore sells some components to Denmark, who assembles those components and then sends those components on as a completed assembly to Denmark. Okay, so here the situation is that we have 100 SGD, and so we ship the products, and 20 SGDs translates to 13 euros, and we get a credit for the products, and we are losing 2 SGD in the translation there. The next thing is that Denmark receives it, and they receive it for the 13 euros here, and the 13 euros translate into DKK, okay, 97 of them, and they lose 1 euro in the process. Okay, so every time you translate it, now it could go both directions. Here it's showing a potential loss every time they take that 30 days to pay the bill. And so in taking that 30 days to pay the bill, you get a potential loss if the value of the currency declines against your main currency. Now, it could go the other direction, like I said. I could gain 2 SGD, or I could gain a euro in the process. But what companies will then do is an exotic sort of process called hedging, where they will set aside 20 SGD, for example, and set aside the 20 SGD to make sure that when they're all done, if we only get 18 SGD for that, then the other 2 is already sitting in the treasury and we can pay the bill. Now, I'm not going to try to tell how that all happens because it's difficult to wrap your head around it, but I'm sure you can see the concept. You know, if using our Japanese yen situation, if the Japanese yen is worth 100 of them is worth $1 when you start out, but their inflation went up, and all of a sudden the yen is worth only 98 per dollar, and they still pay the same amount. Now, if we exchange those yen into dollars, we're going to get 98 cents instead of a dollar for it. And so that creates a little bit of a problem that most businesses do hedging in order to solve. Okay, now let's go to an example if we use blockchain. Now, remember, blockchains always have a coin or a token involved in the blockchain. Well, if you do it as a corporate treasury coin, so we have a corporate coin. So what happens is the treasury says that this coin is worth, let's say, $1 for a coin. And so now when we switch and change, here's an example for Boeing. We have Boeing Distribution Services. It's our group that sells parts to our people who have bought planes, either military or commercial, or even NASA for that matter, for the satellites. They buy spare parts. Okay, but we have warehouses in Germany, Amsterdam, the UK, Japan. We have places all over the world, of course, especially in the United States too. So what happens if we take $100 worth of product and ship it off to our warehouse in the UK, for example, and the value of the value of the sterling, the pound sterling, goes down, but the price is fixed. Once we get paid for that, there's a differential between the cost that we sent it over there for and the price that we got for it afterwards. But not so if we use a corporate coin and do it on a blockchain. So here's that same example of Singapore. There we go. Of Singapore, Germany, and Denmark. So let's say we've got a product that is worth 100 corporate coins. We ship it to Germany to be assembled into a product. It's still worth 100 corporate coins. And when Germany ships it off to the next place, it's still worth 100 corporate coins in Denmark. And so what happens is it goes from 100 corporate coins here, and then there's only one exchange. So it doesn't go from Singapore's currency to Germany's currency, and then from Germany's currency to Denmark's currency. It stays in one single currency, which is the amount that the Treasury has established. And so it doesn't go changing hands to all of these different currencies. And so the corporate coin stays stable all the way out to when they finally do sell it, the product, at whatever exchange rate the corporate coin and the DKK is, which at the time will be pegged straight to the dollar. So even if there is a time lag, they still get the same amount of money for it that they would have got had they sold it the very first day. So it improves liquidity as money remains in the company. In other words, you're not having to send money overseas. You're not having to move money around. You evaluate everything on the blockchain as a corporate coin. The time gap between transactions is reduced since there's no need for a bank as an intermediary between the transactions. So the corporate coin flows right along with the product. So if I have my warehouse in Miami shipping their product to the UK, it's going to go straight to the UK, and very quickly the blockchain moves that corporate coin right with the product. And I don't have to then ship money through, the UK doesn't have to send money back to the US and paying for the product that they've just received, because both of those entities are owned by, let's say, the Boeing company. The corporate coin just shifts from one asset location to another asset location, and the value of that product stays the same on the books. And so the exchange bank fees are minimized. Bank fees can be horrendous. They can take 5 to 10% of the amount of money when they're transferred. And so the exchange rate risk becomes significantly easier. You don't have to do that complicated hedging that you currently have to do, and your exposure to foreign currencies is limited since all the transactions are settled with corporate coins instead of exchanging fiat currency on a per transaction basis. Okay, so when you talk about corporate finance, having a blockchain that has its own native currency is an incredible benefit to a corporation, especially when they're international in scope. Okay. All right. I am done with all the content that I have for today. I'm not going to go over setting up a business blockchain. We'll learn that a bit later. So, do we have questions out there? Let me change the screen here. Do we have questions out there that I can answer for everybody? Michelle didn't join us today. She was the one that asked all the questions last week. Quiet bunch today. Wow. Okay. Any questions at all about the coursework or the book or what you're currently studying or what you're currently writing about? Okay. All right. Well, I am going to call it a night then if there aren't any further questions, and hope to see y'all again next week. Thanks for joining. Bye.